You know, S&P went down and checked out the halfway 96, and there's a pretty important price in that area. It's around 92-ish, and came off it pretty good and got back through the opening, but just tested the overnight high, and now it's just kind of back trading 67.06. You know, we had so much news this week, and a lot of times market wants to just rest, you know, just kind of limp into the weekend, and possible that's going to happen today. But I do think it's, as far as what helps keeping the right side of the market, down there around 92, 96 in the S&P. Just above the high, there's some resistance at 13, so that kind of keeps it capped a bit. Financials they're trying to push higher, but there's so much resistance above the market. In bonds, they just bumped into some right now at 21, 116.21, 116.27, and then at 31. So, I try and make these tapes every day just to be consistent. You know, I'm talking to my clients anyway in my room, and to turn the mic off and make a quick tape, and sometimes there's nothing to say, you know, but just want to be consistent with them. Bonds back down below, got a little support, just looking for a little scalpy type trade because there is a little bit of an upside bias here. Back around 15 can give you something to buy in the bonds. 10 years just bumped into a pretty important price for bias at 28.5. They managed to got through it by a tick, 29.5 high. Now they're backing away from it. To me, that's kind of the key into the weekend. You know, what happened at 28.5. But to add something to that, it's more like a area, because 28.5 up to 31.5. You know, you guys looking for some upside to get this thing to maybe push a little bit, you got to take that out. That's a pretty tough area up there. 5 year, 15.75, a price we thought there'd be some kind of resistance. 16.25 the high. Now it's back trading 15.5, 15.25. But again, this is a big pocket of resistance up here. 15.75 up to 17 in the 5 years.